So, awesome. So I had a coworker look over at me, and I wanted to make sure that I wasn't doing something wrong. Okay, so first thing I want to mention really quickly is up at the top right of your system, in what I call the super navigation bar, you're going to see a couple of different areas, and what I want to show really quickly is just the training area. There's also access to our old webinars, and I'm actually I'd like that to link to. Here we go. So if you select that, it'll bring you to our old webinars where you can watch all the recordings, and also the upcoming webinar schedule where you can register for new webinars. So check that out. And then there's some other items as well, like feature requests and contact support and things like that. Okay, so let's jump in. So the first thing we're going to be looking at is setting up jobs in a way that will allow you to invoice effectively. And there's just a couple items here that I want to mention that are really important when you're setting up new jobs. As anyone that's used the system for a while knows, the first step in adding a job, whether you select that job or whether you select that estimate, it's going to bring you to the estimate add page. It's really, the same. Estimates and jobs are essentially the same thing for most companies. It's the information is interchangeable. The estimate name becomes the job name. The estimate type becomes the job type. The contact becomes the job contact, and so on and so forth. So you don't have to rekey any of that information. But there is a very important field here, and that field is category. Now, by default, these will be the values that you'll find in your system: retainer, time materials, and fixed price. If you don't see those three options in your system, it's either because someone customized it. And it could have been, if you've used the system for many years, it could have been, a long time ago that was done, or could have been during your deployment recently if you're newer to the system. But this is what you should see by default. This field is meant to represent how you intend to build a job, and that label is important in facilitating the workflow. I see this left blank a lot. Unfortunately, there isn't an option to make this field mandatory, although I am going to put that as a request because it's something I'd really like to see. But it is something that's really important. In the same way that the description is important and the due date is important, you really want to be making sure that you select your category. If you have other ways of billing, or if these terms don't fit with you, you can of course adjust this within the list maintenance area of the system if you want to make adjustments there. But it's really, really crucial that you select this. Another thing that's really important that I do see from time to time is not necessarily entering in dollar values against your jobs. Even if you intend to bill something on a fixed price, even if you intend to bill something on time and materials, or even if you have a fixed price but maybe you don't know it yet, or there's certain factors that are going to adjust it later, it's really, really good habit to put in some sort of value here, even if you're just entering in $1 amount in one field, on one service in the override field. Just something to give this job a value. The first thing that I do when I look at any system, and I know that they're doing, managing their financial workflow in the program, is I do a job find, and I select find active, and I look and I see, are there estimated values on everything? And then I'll often add in the category field, which I'll touch on again in just a second. And when I see estimated values in all the jobs, when I see due dates, when I see categories and accurate statuses, I know that their life of invoicing is going to be much, much easier. Now let's take a look at a bit of a workflow process and talk a bit about who might be creating invoices and what's the best fit for your agency with regards to your workflow. So something that I encourage and I see more agencies moving to, especially when they get a bit larger, is actually having your account executives create the invoices themselves. It will allow you to become a bit more efficient, and then your bookkeeper or your COO or whoever it is, CFO, accountant, whoever it may be that used to be creating the invoices can simply be the person who is then approving them and syncing them with accounting, as opposed to having to go in and create them. Now, that may not always be possible, and different circumstances may not allow for it. But a really good first step, and something that I recommend you doing, is the following. If I'm an account executive, then what I might want to do is pull up a list of all of my jobs where I am the AE. And I'm going to pull up a list of all of my jobs that have a specific category. Let's say time and materials. And this is, again, why this field is so important, so I can do this. I'm then going to pull up a list of those jobs. So, I happen to have 7. You could have significantly more per AE. You might even have less. But I have 7 time and materials jobs where I am the AE. And since I'm the AE, I know what can be invoiced for these jobs and why. So I can go through and I know what's going on with each of them. I might even drill down further and see more detail. And I can also see, what is their estimated value? How much work have we put in? How much have we invoiced so far? And then what's outstanding? What is left to invoice if we were to invoice this right now for the full unbilled value of the time and materials? What I can then do as an AE is set this up to allow the bookkeeper or someone else, if someone else is doing the invoicing, to have a solid report of what should be billed and why. And the way that I can do that is up at the top left, there's a button that says Editable List View. And if I select that, I can then go in and put in status updates and descriptions on these jobs. And something that I can do if it helps with the workflow process, if it makes sense, is actually even have a status called Ready to Invoice. And I could go through this list of jobs and say, okay, well, this is ready to invoice. This is ready to invoice. This is not, so we're going to leave it. But this is ready to invoice. And I might want to enter some instructions. Please only invoice timesheets up until March 31, since we're past the 31st. And then my bookkeeper, when they pull up this list, or whoever it is that's creating the invoices, when they pull up the ready to invoice list, can see that status update, and they'll know to only invoice the jobs that are up to, or only invoice the timesheets that are up to that date. So that is a really good way to facilitate a workflow. If you have a process where information needs to be shared from say, an account executive to a bookkeeper, and it's something I see all the time, where there's disconnect between those groups, and there's usually emails that are being shared, or the account executives running over to the bookkeeper a couple days later and saying, hey, I didn't want you to invoice 4 of those timesheets or something like that. So that can help you to alleviate some of that disconnect. Now, this status of ready to invoice, creating this, if you think it would help you, is done in, of course, the list maintenance area of the system. And actually, if you haven't been using the system for a while, that may not be as obvious to you. But when you're looking at that list maintenance area and you're creating that status of ready to invoice or something like it, it's important to make the status of ready to invoice, or whatever you happen to call it, an alias of open, so that the system considers that an open active job. Unless you don't want people tracking time to it anymore, then of course you can consider it an alias of closed, but typically you'd want it to be an alias of open. That would then allow the bookkeeper to do a job find and say, I want to see all the jobs that are ready to invoice. Pull up that list, and I have a list of all the jobs that are set to ready to invoice. Of course, a very small list in my example, but there it is. I can also choose to add in the field called date description, which was that comment update. Maybe I'll put it over beside the status. And I now have the instructions right here telling me exactly what to do. So that can really help. I do recommend investigating that if it makes sense for you. But the process of having the AEs creating the invoices and then it going through an approval process is usually what I recommend agencies trying to get to, striving for as a better way of doing things. And we're going to take a look at how you can manage that approval process and how it relates to your integration with accounting as well. And in doing so, we're actually going to create an invoice in order to take a look at that. Sophie, I did see some questions pop up and then come down as you're answering them. Anything that you think that we should address?
Hey, Mark. Yeah, thanks for checking in. No, really good questions coming in so far. It was actually funny. I was answering one of them via typing, and then you showed it. Just to sort of reiterate, when you have a bookkeeper that maybe wants to pull that list of the ready to invoice, just doing a job find and allowing them to pull that easy list. So that just kind of made me chuckle. But no, I think everything's good on this side. Thanks for checking in.
No problem. Yeah, you know, one thing that I just want to come back and mention is the importance of maintaining your lists. It's really, really crucial that when you do finds for certain data points, like say a job status, that the list you get is accurate. And even just doing a job find for everything that's active in the system needs to be accurate. You can't have those lists getting out of control. Jobs need to be closed, statuses need to be changed, things need to be updated. So it's really, really crucial that those lists remain accurate. Now, something I actually want to do is I'm going to pull up. So there's actually a different job that I'm thinking of working with here. So I'm going to pull up my time materials jobs where I am the AE. And let's use a date field. Actually, I'll just select fine. That should be fine. And then I have a job here. Maybe I didn't select myself as the AE. Where is it here? Time materials. Oh, my apologies. So probably when you're copying estimates, of course, you want to make sure you update the information accurately. But yeah, let's pull up that list. And I want to work with this job here called time and materials example. So I'm going to make this list editable. I'm going to change this to ready to invoice. Now let's say that I am the bookkeeper in this example, and I'm going to come back to that list of all the jobs that are status of ready to invoice and pull that up. And I'm going to work with this time materials example. Now, all the invoices we do today are going to be single invoices. And that's usually how I recommend doing your invoicing when you're new to the system. Bulk invoicing and batch invoicing works really well, and that's what we're going to be taking a look at in the second part of this webinar invoice series, so in 2 weeks from now. But today we're going to be looking at just single invoices. Now in this case, I'm going to go ahead and invoice this. We're going to talk about time materials invoicing, and then I'm going to stress the importance of managing that status and how to update that. And we'll also talk about the approval process as well. So I'm going to select this job here, and that brings me to the job details page. And usually what I recommend doing is just taking a look at it and getting an understanding of what's going on. So we have some creative services here, research, design, and copy. We have some hours and some values estimated, and I can see that we've gone over in some cases, and we're under budget in others. So we haven't had any of our expenses come in yet, but it looks like we actually have gone over our creative services by about $400. So I might want to take a look at the timesheets and maybe investigate that. But in this case, it's a time and materials job, and I'm going to say that we're going to invoice for all of the outstanding timesheets. So what I'm going to do is up at the top, I'm going to select to add a new invoice. That brings me to my invoice details page. Now, I just want to stress again that we are invoicing this time and materials example. So I'm going to choose it as an interim invoice. We're not putting we're not doing a final invoice yet because we haven't received our expense invoices from our vendor, so we're going to be billing those later. I'm going to choose calculate from actuals. What this is going to do is it's automatically going to generate an invoice for all the unbilled time and expenses. So when I select that invoice, it brings me to the invoice details page, and it automatically bills all of my timesheets that are on this job and expenses if I had any. So I can see that my invoice column matches my actual column. And in this case, I just happen to have one timesheet needs service, but I can see that I've invoiced for this timesheet. It was entered by myself for 4 hours, and the total is $400. Now, I understand that it's not always that clean, and you might need to do certain different things at different times. So I'm going to show some tips and tricks for working with this page that can make your lives much, much easier. So first of all, clicking on the invoice, on the word invoice, on the header, will clear this value, and I can then type in anything I want. So I can, invoice this for $1,000 if I want to. I can invoice this for $5,000, or I can invoice this for, $10. Whatever I want to do, it's completely open to me, and I can open up the field and enter anything that I want. I can also select the other headers to populate the values within the fields. If I select estimated, it fills in the value of my estimated amount, and I can then adjust it as I see fit. If I select actual, it fills in the value of my timesheets, and notice the field becomes no longer editable because I'm invoicing an amount that is equal to the timesheets. However, if I decide I want to bill a value that is less or more than the value of the timesheets, I can always adjust the value of any individual timesheet. So I could say, for example, this timesheet we're only going to invoice for $2,000. And it's an extreme example. I put 22 hours in one timesheet, but so we're only going to invoice for $2,000. Now, it's very, very important to note that if you adjust the value of timesheets on invoices, then the value of your actuals and the value of your invoice will not be equal to each other at the end of the job. As soon as you start manually manipulating the value that you're billing on timesheets, there's no longer possibility of that timesheet value being equal to what you billed it for, because of course we're customizing it. We're doing something different. This is really, really important to note because I'm seeing a bit of a trend right now, and I think it has to do with workflow process where we have one party creating the invoices. Maybe it's the AE or maybe it's the bookkeeper, and they are manually overriding the values of timesheets or adjusting the value of expenses or whatever it may be, and that job then gets invoiced 3 or 4 or more times for the actual value of the timesheets incurred at those stages. And then when all is said and done, somebody else is looking at the job and saying, hey, why don't these numbers match? Why does our total invoice value not match our total actual value? And if you are customizing and editing the value that you're billing on timesheets, then of course those values won't match. So it's something that's important to keep in mind. In addition, if I enter timesheets in the past prior to the date of this invoice, that will not adjust the value of this invoice. It's not going to automatically pull that timesheet into this invoice. If I have new timesheets that didn't exist when I created it now, but tomorrow somebody's gone in and entered timesheets in the past, I need to edit this invoice and include them. It's not going to suck them into the invoice automatically. So that's important to note as well. So we are going to jump back and talk about statuses and approvals, but I noticed there's a question kind of sitting up there. Sophie, anything that you want me to touch on?
Hey, Mark. Yeah, thanks for checking in. There was a question. It's more around like the notifying the client directly out of the system. Is that something that you're going to cover today, just out of curiosity?
Yeah, absolutely. So let's talk about for sure. Let's look at the notify client option, and we're going to talk a bit about approval routines and things like that, and how it relates to that approval routine. So when you're looking at invoicing and the process for doing so, of course, getting that invoice to the client is a key component because they're not going to pay it if you don't get it to them. Now you can either produce the PDF. I'm not going to spend too much time on printouts because we looked at that for estimates and it's really the same thing. Of course, you want more info on printouts. There's a lot in the help aspect of the system. But the option for getting this to the client, of course, you can also select notify client. Now, you can control who can and cannot do that through their permissions. You might also want that decision to be made based on an approval process. So, for example, you do have the option of having an invoice with your invoicing processes have an approval process built within it. Now, this is optional. Most likely, if you look at an invoice in your system, you're not going to find this. I'm going to show you how to turn it on. You only really want to turn this on if you're going to manage it. So if you have person A creating invoices and person B approving them, and that sounds like a good idea to you, which for a lot of agencies it's really important, then you can turn this on. I'm actually going to deselect it that it's approved. But the area that you can turn this on, if you do want to start looking at approval routines on invoices, is in the admin section under System Setup and System Preferences. there's an area called Invoice. So there's a tab called Invoice and System Preferences, and there is a invoice approval routine, and whether or not you want this to be turned on, and whether or not you want it to be to exist, essentially. There's also a default setting of, do you want it to automatically exist as approved? And then pretty uncommon. I had it like that for now, but most likely you're going to want it to not be approved upon creation. But what that allows you to do is, on a regular basis, you might have a bookkeeper, could be every day, it could be every week, but somebody is coming in here and doing an invoice find and saying, show me all of my not approved invoices. Approved invoice? No. Click find, and I get a list. That invoice, I can then select it, review it, make sure that I like what I'm seeing here, and if everything is okay, then, and notice as well the notify client button is grayed out, so it's not going to let me send this to the client unless I approve it. So if I like what I'm seeing here, I can choose to approve the invoice, maybe look at it one last time, and then select notify client. You can include additional contacts on this invoice, which is really nice if you have other people that need to be included. You can load up a template. There's the content of the email that will go to the client. You can send a test version to yourself. And then once you're happy with it, click send. Now the email address attached to this contact doesn't actually exist, so we're not going to send that. Yeah, so that's the process for notifying the client, and it will send them a PDF with all the invoice information, and it'll send whatever PDF you want it to send as well. So you can choose which version they're getting of which version of the invoice they're going to get on their side. So that approval process, again, it is an extra step, but if you can get to a place where you have AEs or project managers being the people that are actually generating the invoices, which I find in the end is a huge time save, then that approval routine is probably something that you're going to want to take a look at. So do you think that answered that question? And is there any others that you think we should touch on?
Yeah, I think that definitely covered that question. Thank you, Mark. There is one more question that's just come in from Dana, just asking for clarification on the definitions between the pre-approval and the approval that's living in that back end of the system. So, of course, correct me if I'm wrong, Mark, but the pre-approval is just you trust that whoever is creating the invoices, they are correct, and a bookkeeper doesn't necessarily need to check them, where the approval just means that the bookkeeper has now gone, they've checked those invoices, and they have checked that box signifying that they have approved it. Anything you want to add there, Mark?
No, I mean that you're totally right. I'm trying to think about a scenario in which you'd want to select this option. I mean, and it might be better to call this not approved, but basically this is asking you, when an invoice is created, what's the approval state that you want it to default to, which is basically what you're just explaining. Normally you'd have it saying, okay, I want it to default to not approved. If you're going to manage an approval process, if you're turning this routine on, you probably want to have it pre-approved because you want the invoices approved by someone. But let's say that you have it selected to approved, an example of that might be, well, I don't want all of my invoices to go through an approval routine. I only want some of them to go through an approval routine. So if I'm creating an invoice that I know someone else needs to take a look at, I might choose to deselect the fact that it's approved so that when a person pulls up that list, they find it there and they can then review it. You can also have the system email people as well related to this stuff. So alerts can be sent out for invoices being created and approved and things like that if you want the system emailing you about that. But I can then select to approve it, and when I do that invoice find for not approved invoices, it'll no longer show up in my list. So I did the find again, and there are no unapproved invoices. Now, another thing that relates to this as well is the status around QuickBooks, and I'm not going to get too much into this, but anyone who's using the integration knows about the post or export option, depending on if you're using QuickBooks Online or the installed version, and that also can be a bit of an approval routine as well, where somebody might be doing an invoice find on, let's say, a weekly basis, or bi-weekly, maybe monthly, but I think that's a bit long. where we're going to pull up all of the invoices that are unposted. In other words, it's not posted to QuickBooks. It hasn't been synced yet. Pull up that list, and I have all of my invoices from March that have not been synced over yet. So all these invoices, and they need to be synced if you don't want them synced immediately upon creation. So that again, this is really going to be a preference thing, but I find a lot of people just sync the invoice immediately upon creating it. If you don't want to do that, then you can have them all be in a list, and then I can choose to export them and then go through and post. It won't allow you to do it in bulk, and if there's a reason for that, it's just generally not a good idea. So you can either sync them immediately upon creation or sync them later on. But this also can be a good way of facilitating a workflow if it's required of you to be reviewing these before they go into QuickBooks. And that's also another point that comes back to how important it is to maintain the accuracy of these lists, so that when you pull up a list of invoices or jobs based on the status, that the resulting list you get there is accurate. So if anything around that, any other items that related to what we've been discussing that you think we should address?
You know what? There was one question that did just come in. We've got Jen here, who once you've done that sync, so through that sort of that page that you were just on, she was asking if that would remove them as open in your job list, which it won't. It will leave it as open in your job list. You would either need to go through and change that status yourself, or when you're creating invoices, changing it into a status of invoiced. Mark, you might have a better explanation than myself on that one. I feel like I was brain farting slightly there.
No problem. No, I mean, essentially what you said is true, but let's take a look at that because it is an important part of the invoice workflow. So let's look at final invoicing and what that does. So in order to make this a good example, actually, there's a really important step that I wanted to touch on really quickly. As the person creating the invoices, if I've set up a process where I am pulling up a list of jobs based on a status of ready to invoice, and I'm doing some sort of interim billing, so I'm not doing a final invoice on this, the job's going to go back to open, then it's really important that once I create my invoice, I come back to my list and I change the status of that job back to open. It's not going to change it back to open for you automatically, unfortunately, so you do need to change that status. So if you're not doing a final invoice, you're basically invoicing, coming back to the list to create the next one, changing the status of the prior if you're not doing them in bulk. And again, we're going to look at bulk in 2 weeks' time. But this does then relate to the next point that I want to look at here, and that is doing the final invoice. In order to make this a bit more real, let's say that I received this printing expense from the vendor. So I'm just going to add that in really quickly here. I received invoice number 793 from our vendor. It was Starboard Custom Printing, and we got 1,000 copies at $1 a piece, just to make the math simple, and we're marking it up by 20%. So I'll go ahead and save that. So I have my expense entered, and then let's invoice that job. So again, we're looking at the job, we're looking at the financials, and I can see that I've invoiced for my creative services work. Now again, I did edit the value of one of those timesheets. So notice that my invoice value is different than my actual value because I did customize one of those. But I'm going to go ahead and I'm going to select to add a new invoice to bill my expense. And in this case, it's going to be a final invoice. Now, selecting final is going to automatically change the job status to a status of invoiced. Invoiced and closed are the same thing. It's done. It's over. It's gone. You can't do anything with it anymore unless you open it back up. It's not going to show up on any active lists. So this will allow you to automatically put that job into that state. And I'm going to select to calculate from actuals. Now, there's two options here that have the word actuals in it. I'm going to give you an explanation of exactly what each one means because it's very important. Selecting actuals is going to invoice all of the unbilled time and expenses. Now in this case, I have one unbilled expense, and I have no unbilled timesheets. So if I select Add Invoice, I'm going to get an invoice in this case for $1,200 because that was the value of the expense after the markup. So let's actually just go ahead and do that. So I'm going to select Add Invoice. And notice that I have an invoice here for $1,200 for my expense. So that's what actuals will do. It'll invoice the unbilled time and expenses. That is different than remainder from actuals. I'm deleting that invoice because I want to show it. I want to show you what I'm talking about here. So I'm going to create this invoice again, but I'm going to select remainder from actuals. Remainder from actuals calculates the total dollar value of all of your time and expenses, compares it to what has previously been invoiced, and invoices the difference. In the previous invoice, we edited a timesheet and we invoiced it for $200 less than its value. Even though there are no uninvoiced timesheets, selecting remainder from actuals should give us a $200 amount on that service line as well as the $1,200 for the expense. This is basically saying, I don't care about the timesheets themselves. I want the total value of my work to be equal to the total invoice amount. I want to invoice for everything, even if I've adjusted something in the past. Now, when I select invoice, add invoice, I believe we should see $200 in this line. So notice that here. Notice that there are no uninvoiced timesheets. There's no drop down here, but it's billing for the total dollar value that is the difference between what we've invoiced and what we've actually incurred. This is really important to note and be aware of and understand if you're doing a lot of invoicing where you're tweaking things and adjusting them and manipulating values, which I understand is the real world that we live in. It's the agency world where you gotta adjust things. Things happen. Unforeseen circumstances, whatever it may be. So if you're tweaking and adjusting values, knowing the difference between invoicing from actuals and remainder from actuals is really, really important if you want your dollar values to line up at the end of the day, or if you want the timesheets to be invoiced for different amounts. So just understanding the differences between those two. So do you feel like I've done a decent job in explaining that? I know that sometimes it's a bit of sometimes people have a bit of a hard time understanding the difference between those. And then also, are there any questions that have come in related to this or anything else?
Yeah, no, Mark, I think you did a good job explaining that. I'm not going to lie. It's one of those things that sometimes it takes me a minute to wrap my head around it as well. So anyone out there that's having trouble with it, I completely understand and I feel for you. The only other question that just came in, I just want to clarify that when you are creating those invoices, when you choose from estimated or from actuals, it's still going to create the same type of invoice. It's just whether or not it's pulling those original estimated amounts or the actual amounts that you currently have. We just had a question there where they were just asking the difference between pulling it from estimated. So just wanted to throw that in there.
Gotcha. And we're actually going to take a look at estimated in the next two examples over the next 20 minutes that are really common examples. So fixed price, some people call it project-based invoicing or milestone invoicing, and then we're going to look at retainers as well. But Sophie's right. It doesn't. There's no difference in the type of invoices created. It's just, think of it as like giving you a head start. It just auto-populates values, and a lot of the time you then don't need to do anything. You just click save. But if you do need to adjust something, then of course you can. And again, using the values up here or blanking out the amount is helpful with that. But it's essentially the same invoice. It just gives you a head start on calculating its amount. So let's now take a look at a job here that I have called fixed price example. And again, being able to do something like this where I'm the AE or maybe I'm the bookkeeper, whoever I am, I want to pull up a list of all the jobs that have a certain category. Really, really important. And in 2 weeks when we do the bulk invoicing webinar, which is a huge time saver for people once they get a bit more comfortable with the system. This field here is crucial in that bulk invoicing process. I'm going to say, show me all of my fixed price jobs where I'm the AE. Select Find Active, and I get a list of all the jobs that are fixed price where I'm the AE. So I can then see that I have this job here called Fixed Price Example. and I'm going to go ahead and invoice this. So let's take a quick look at it. So I can see that this job also has some creative services. We have 2 expenses this time, so printing and photography. And let's say that for this job, I have a value of 7,500. I intend to bill 7,500. Doesn't matter if I go over, if I go under, doesn't matter. I'm billing 7,500. Now, in this case, I know that my photographer is working on this tomorrow, and I'm going to bill my client for 50% of my creative services and maybe all of the photography. But I'm not going to bill them for any of the printing. That's going to come at the end of the job. But I know I'm getting an invoice from my photographer next week, or sorry, maybe tomorrow, whatever it is. So I'm going to bill for 50% of my creative services and 100% of one of my expenses. So I'm going to go ahead and select Add New Invoice up at the top. And I'm going to enter a billing percentage of 50%. Notice I'm keeping it as interim. I'm entering a billing percentage of 50%, and I'm calculating from estimate. Doing so is going to generate an invoice with the value that is automatically half of our estimated 7,500. But in this case, I don't want to bill any of the printing, so I'm just going to get rid of that. And I actually want to bill for all of the photography. So I'm going to edit that and bill for all of the photography. So again, it's like the first page is basically giving you a head start. What's the billing percentage you want to do, and how do you want to calculate it? You'll get to this page, it'll all be pre-populated, and you can tweak and adjust from there. You can also do some other things here as well. I mean, you have full control. I could say, well, I actually want to bill 25%, enter my billing percentage, click on the word estimate, and it fills in 25% of my estimate. It would do the same for actuals if there were any values there. Well, let's stick with our example. So 50% of estimate, except we're going to do none of the printing and all of the photography. Save that. And then our invoice should not include our printing expense. Now, that is a setting. If you ever see a line item on your invoice with a value of 0 and you don't want it there, it's an admin setting. It's a printout setting. You can turn that off if you don't want to see those zero value line items. So that is then our fixed price example. So I mean, it's pretty straightforward. You're really just billing a value that is a percentage or a portion of the estimated amount. And then when we take a look at our job here, so if we jump back to our job, we might also maybe approve this invoice just for the sake of doing so. But if we jump back to this job, then we're going to see that we have an invoice here. It's an interim invoice. And when we look at our financials, we can see really clearly that we've invoiced for half of our total creative service value, and we've invoiced 600 for expenses. And that was 600 on photography and 0 for printing. So that's the basics of the fixed price. It's pretty straightforward. I mean, at that point, it's usually, from there, it's usually milestone related, where you're billing the rest of it. So if you're maybe billing 50% up front, 25% upon a milestone, and 25% upon completion, that's another really good example of why you might have a staff person change the status to ready to invoice. You update the comments saying, bill for the next 25% because we finish the first client approval, and the bookkeeper or whoever it is can pull up that list that's ready to invoice and go ahead and do that. So if you have any questions that's on this, I mean, I think that this is pretty straightforward. If you got to go through the time and materials, I think is the more complicated example. The fixed price ends up usually being pretty easy. Any questions on this at all?
No, not on this topic specifically. I am still answering a couple questions, but I'm thinking it might be good to connect with a couple people outside of the webinar, just to really kind of like dig into some of the stuff that they're encountering with their invoicing and just making sure that it works specifically for them.
Absolutely. Okay, so we're going to take a look at retainers really quickly here, and with retainers, managing retainers is the invoicing process for it is pretty easy. The actual act of creating the invoice is very simple. Usually with retainers, the complexity, if any, exists, because sometimes we see really simple retainers and then sometimes we see really, really wild ones. There's one client I'm working with right now, their biggest account, their retainer, they have something like 200 jobs included on it, and it's the spreadsheet. You can roll the thing out like a Bugs Bunny cartoon and go across the room. And that's just the reality. When you work, sometimes you work with really large organizations. You have a really large retainer. There's a lot of different circumstances that you need to accommodate, and restrictions that you need to adhere to based on who the client is. So those are the realities that I do understand. But the process of actually creating the retainer for the most part, creating the invoice for the retainer is really simple. So we're going to take a look at that really quick, and then the last 10 minutes we're going to touch on deposit invoices, and I'm going to explain exactly why you should or should not be using deposit invoices. So let's pull up a list of the jobs here. So I'm going to do a job find, and I'm going to do a job find for the category of retainer, and I'm going to select find active. Now, what should happen here is you should have a list of all of the jobs that you intend to bill for. If there's any jobs that are working jobs that are included in a retainer, but are in addition or something like that, they shouldn't show up in this list. Actually, they should have a different category or perhaps no category at all. This should just be the list of jobs you intend to bill. So I have 3 retainer examples here. One that I bill every month for the same amount, one that I have that's specific to this month, and I open up a new one every month that comes up, and then a larger retainer that encapsulates other aspects of our work for this company. That's a large one. It's for $10,000. So let's just say that I'm going to invoice this Mac & Co. SEO retainer here. It's really easy. I just select it, select Add New, and Invoice. And then all I'm doing is I'm invoicing 100% of the value of the estimate. If I leave the billing percentage blank, it'll default to be 100% of the value of the estimate. So it automatically creates an invoice for $2,000. I happen to have some taxes on this one, so it comes up to $2,140. But that's really it. It's as long as you set up your retainers correctly, no matter how complex they are, it should be like a couple click process. So it's more about how you set them up. And of course, we do have a webinar coming up in the not too distant future about retainers, and that'll be a really good one to attend if this is something that you need to manage. But lastly, we're going to take a look at deposits, and then we'll check in with Sophie before we close it out here. We got about 10 minutes. I think we're going to finish up right around the pre-scheduled time. So maybe go 1 or 2 minutes over at the most, but I don't think so. So we should be on for about 10 more minutes. So let's take a look at the concept of the deposit and what it actually means and what it does and how to actually use it. And I'm going to use this job that I already have set up here. I'm going to use this job called Fixed Price Example that we're looking at a minute ago. And I'm actually just going to delete this invoice and just start with it fresh. So I have this job, Fixed Price Example, and again, it's estimated for $7,500. Now, let's say that I wanted to do exactly what I did earlier, but I want to do it with a deposit invoice. So I'm going to decide to invoice, 50% of my creative services, and let's say all of the photography. Now, you might even want to use a calculator for this, and if you're not just billing for the whole thing up front, or if you need to calculate what you want to invoice, and I'll show you why. But I'm going to say 5,700 divided by 2, and I'm going to then add my $600 for photography. So I'm coming out to $3,450. So that $3,450 is the value I'm going to enter in my deposit invoice. And when I select up at the top, select Add New and Invoice, I'm going to choose the option of deposit. Deposit exists solely for the purpose of managing an accrual accounting process. If you don't manage an accrual accounting process, then this isn't necessary for you. Sometimes people get confused because they'll invoice things up front. They'll say, okay, well, we're going to invoice a 50% deposit for this job. So they'll select deposit, even though that may not be what they need. They might just need interim. Deposit in function point is meant to manage an accrual accounting process where the revenue that you collect for the invoice is considered unearned revenue. When you sync it with QuickBooks, it's going to go into a liability account and be considered unearned revenue until such time that you choose to then recognize the revenue as earned. So if you are a cash-based agency, or I think most of our clients are, then this is not necessary for you. And usually, like if what I'm talking about isn't really making sense to you, or if you're not really sure what I'm talking about, when in doubt, don't do it, because it's only necessary if you're managing an accrual accounting process. But notice that the deposit subtotal, it isn't pulling from any aspect of the job, and that's why I needed to calculate the value that I wanted prior to getting this page, which in this case is $34.50. So I enter my invoice value of $34.50. Now the tax group is really, really important. If you have taxes that you're managing that you need to include on your invoices to clients, then of course you'll want to select the tax group there. You need to have the taxes selected here if you do charge taxes to your client on your invoice. I'm going to leave it off just so I can keep the numbers really simple for us. But I'll select that invoice. And that brings us to this page. This information should fill in automatically, actually. But for the most part, you shouldn't need to do anything here. You have your deposit total invoice value of $34.50, and you just click submit. There is no relation to the structure of the job. You send the invoice to your client, tweak it, customize it. You can adjust the printout and things like that. When we look at the job, this is where this is all going to start to lay out. You're going to notice that in our financials tab, we have no invoice amount. We haven't invoiced for anything in the financials tab because this is meant to represent recognized and earned revenue. Unearned revenue is not going to show in this report. Notice that the invoices tab is blanked out, but there is a deposit, and that deposit is for $34.50. Now, let's say in this case that we then receive an invoice from our photographer. So just like before, I'm going to pop that in here really quickly. What am I missing here? Oh, there we go. So save that. So I have that expense, that invoice from the vendor. I'm also going to drop in a timesheet in here, a couple timesheets really quickly, just to make this a real example. So 30360, and I'm putting, let's say to service, I'm going to put, or to research, I'm going to put 5 hours. To design, I'm going to put 10, and to copywriting, I'm going to put 12. Okay, so when we look at this job now, notice that we have in total $3,300 worth of actuals. And in fact, I think I want that value to be a little bit higher. I'm going to put in one more timesheet. Say against design for another 8 hours. So we have, in total, $4,100 worth of actuals. We have a whole bunch of timesheets in here, and we have an expense that's been entered. We've already done a deposit invoice for $34.50. We now have total actuals equal $4,100. The next step will allow you to recognize the revenue that you've already collected from your client as earned, and bill them the additional, in this case, like $600 that we've incurred in addition to the original deposit. The way that I do that is up at the top by selecting Add New and Invoice. And I'm going to choose an Interim Invoice. I'm going to have an Interim Invoice for my actuals, my timesheets, and my expense. Select Add, and it generates an invoice for the value of my timesheets and expenses. Notice that the value is $4,100, so I can see what I'm billing. Here's my expense. And notice this line here, less deposit. So this is showing me that I have a deposit already of $34.50. And I now want to recognize all $34.50 as earned revenue. And the difference between that $34.50 and the total $4,100 is now $650. And that's the new value of my invoice that I then sent to my client. So I'm recognizing the $34.50, and I'm then billing an additional $650. So when I produce my client-facing version, it'll say $650. And when I look at my job, I can then see that my deposit has a total value of $34.50, and we've applied $34.50. So we've used it all up. I have $34.50 as earned revenue, and that will then show in my financials tab. So the total value, invoice value, is now $4,100. The original $34.50 from the deposit has been recognized in addition to the $650 that we invoiced on top of it. And I can see my interim invoice right here for $4,100 with a balance of $650 because the $34.50 came from the deposit. So this is something that you really only want to kind of tackle if you're managing an accrual accounting based agency, and having revenue going into an unearned liability account is something that you're currently doing. If it's not something that you're currently doing, there are certain circumstances in which you maybe want to look at doing so, but they should only be special circumstances. Things like if you gain a new client and you know that you're going to invoice them for $50,000 up front for a really large job that's going to go on for over the course of 6 months. If you're doing that type of thing, you should be managing an accrual accounting practice, and you should be looking at that $50,000 as unearned revenue until which time you do the work and then recognize it as earned. If you bill your client at the start of the month for the work done in that month, not necessary. Or if you bill your client a couple $1,000s up front for something that's happening, maybe a month later or 2 months, even 2 months later, probably not a big deal. But it's when you start to get to very large amounts or large time spans that you want to start looking at potentially managing an accrual accounting practice and starting to use the deposits. But otherwise, shouldn't really be something that you should be taking a look at. So we have 1 minute left. I just want to talk about the webinar happening in 2 weeks, and then we're going to tackle any questions. We'll probably be on for a couple of minutes extra. But in 2 weeks from now, we are doing invoicing part 2. So today we looked at time materials invoicing, fixed price invoicing, retainer invoicing. We touched on deposits as well, and we looked at everything individually. In 2 weeks, we're going to be looking at doing things in bulk. So how can you set yourselves up to successfully bulk invoice potentially everything, not just predetermined amounts or retainer amounts, but how can you do all of your invoicing in bulk so you're not having to do it one by one? And if once you get comfortable with the system, that is possible, and it can save you a tremendous amount of time as long as you kind of know what you're doing and you set yourself up for success initially. You can be very, very effective in doing so. So we're going to be taking a look at bulk invoicing in 2 weeks. Highly recommend you join in. But on that note, we're at time. But let's tackle some questions. We can stay on a bit longer if we have any that'll require so. Sophie, how's it going?
You know what? I think oh, sorry, someone just sent in a question, so I'm just going to quickly read it. Okay, so this is from Brandy. She says that they do not use accrual accounting or deposit invoices, but have projects that cannot exceed $15,000. The client wants to be billed 50%. I'm so sorry, Brandy, I'm butchering this right now. 50% of the fee upfront and the rest hourly up to $15K. Would this be a good example of using a deposit invoice? Mark, any insight?
Yeah, that's a really good question, and thank you, Brandy, for that question, because it is a good one. My recommendation to you is to not do a deposit invoice for that example, but it could potentially be a really good example of when you might use one. But it really, when you preface the question with, we do not use accrual accounting or deposit invoices. So like if your QuickBooks system is not set up to be accrual and you're cash based and you're recognizing everything as earned revenue right away, then I guess it might be a question as to whether or not you feel like you need to switch the way that you manage your books. But I'd probably recommend in your case to not do the deposit invoice. In that case, really what you'd be doing, and I'm going to try to give you this example really quickly here. I'm going to call this job Brandy's example. Hope you don't mind me doing that, Brandy. I hope that's okay. Well, let's give that example here. In order to make it really simple, I'm going to take out some of the expenses, and I'm just going to do exactly what you're describing. So I'm going to get this to 15 grand. Let's see here. Notice how I'm just kind of manipulating the values to get to my 15 grand. So I have my 15 grand, save that. So what we would do is right away, we're going to add an invoice, and it's going to be an interim invoice for 50% of my estimated value. So it's going to be an invoice for 7,500. So I have my invoice for 7,500. Now, from there, I'm then going to start tracking time against that job. So this is, you kind of need to kind of monitor it and just see when you get to a value that you believe needs to be where another invoice is justified. So if I put some time in here, let's just get some time in there really quickly. The timesheet totals for today are going to be comical. So that should be about 3 grand of invoice 7,500. So let's just actually go full out here. Okay. So the invoice value is 7,500, and I now have an actual value of 9,000. So the difference is 1,500. Now in this case, I'm trying to think here about actually. Now that I think about it, I think I'm kind of stumping myself because the deposit really would be a better way to manage this. It's just that it's going to go to QuickBooks as unearned revenue, and I'm not really sure if you're using the integration, if you really want to do that. So I guess what I'd probably do is I would do the following, and this, what I'm about to show you is going to have some ramifications with regards to the to build value of timesheets. But I'm going to go ahead and select to add a new invoice for this job. And I'm going to choose to calculate it from estimated. And I'm going to invoice, in this case, $2,000. I'm going to go 500, 500, and 1,000. Invoice total equals $2,000. My actual total, sorry, I guess I wanted 1,500. My actual total is 9,000. My previous invoice is 7,500. So actually, now that I think about it, this is actually a better way to do this. Sorry, I was thinking that this was actually going to be a much quicker answer, but I think I just came up with a better idea. If you select to add an invoice for that job and you choose to calculate by remainder from actuals, I believe that's end up with your 3,500. That's not the difference that we want. So no, my apologies. I'd probably not do that. So our actual equals 9,000. Our previous is 7,500. You're not wanting to bill the full 9,000 because that would, of course, bring you above the 15 grand. So you're really just wanting to build the remainder, which is that, that 1,500. But you don't want to discount this particular service. So selecting this, you don't really want these values. So instead, what I'd probably do is something like this: 250, 250, and 1,000. I now have an invoice for 1,500. So I'm just manually entering the amounts that I want to bill. When I look at the job, really what you want to have happen is you want your actual value to equal your invoice value upon your second invoice. Now, every subsequent invoice is really easy. Every subsequent invoice from here, you just bill based on actuals. And once it gets up above 15 grand, then you just bill, a custom amount to equal that, to equal 15 grand. So you probably do remainder from estimate. But it's a good example where it's kind of like you're doing like a combination of like a fixed price and then time materials, in which case it's really just about staying on top of it, I guess, and manipulating the values to accommodate your circumstance. So I appreciate your thanks, Brandy. I just saw you kind of pop in there and and just mention that that provided some benefit for you. So I do appreciate that. And thanks everyone that stayed on a little bit longer. I think we're going to cut it off. We'll probably stay on to answer any questions via text that do come in after this point. But otherwise, I think we're probably good to go. We only went 8 minutes over, which is actually not that bad for an invoicing webinar. Sophie, anything that you want to mention before we kind of turn off the audio here and just convert to text for any remaining questions?
No, I think you've covered everything today, Mark. Again, if there's any follow-up questions, middle of the night tonight, you have an aha moment, you need some help, feel free to reach out to success@functionpoint.com. We won't respond at midnight, but we will respond probably within the next 12 to 24 hours after that. So looking forward to talking to you.
There you go. Well, Sophie, always very generous with your time, and we appreciate you and your team and the work you're doing. Of course, how happy I am to jump in and work with agencies and assist when applicable. So, yeah, again, thanks everyone for your time today. Really appreciate it. Next week, open hours, open office Q&A. So join Sophie for that one. Should be good. And then in 2 weeks' time, invoicing part 2, same bad time, same bad channel. Looking forward to tackling that bulk invoicing, batch invoicing process. Always a good time. Can make a tremendous difference in the time it takes you to do your billing. We have one client right now told me the other day it takes her 8 to 12 hours to do her billing. They're just getting deployed, and I'm hoping to take that down from 8 to 12 hours to do their billing to maybe half an hour. At the most. Could even be more like 10 minutes. So, those are the types of benefits you can get from doing invoicing in bulk and in batches, and looking forward to tackling that next week. So again, thanks everyone for your time today, and have yourselves a great rest of your Wednesday. Cheers. Bye now.